Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at the financial results of Scotiabank Trinidad and Tobago Limited, or SBTT, as well as Prestige Holdings Limited for the financial 9-month periods ended July and August 2019, respectively. Let's get straight into it with Scotiabank, and for their 9-month period ended July 2019, the bank reported earnings per share of just around $2.97, which was an 8.3% increase from the $2.74 recorded in the prior comparable period. Now, net interest income was up just around 2.8% from $963 to $991 million, and total revenues increased just 1.4% from $1.385 to just around $1.385 billion to $1.4 billion. Overall, a lower tax expense burden was one of the driving factors, or in fact the main driving factor for this improvement in performance, with taxation expenses falling from around $250 million to just around $210 million, leading to income after taxes of around $523 million, an increase of 8.3% from that $483 million recorded in the prior comparable period. Taking a look at the revenue story, well, it has been one of growth in terms of revenues, albeit at a slower rate. Now, overall, revenue growth has fallen from around 10.7% in the 9-month period of 2016 to its current level of just about 1.4% in the 9-month period of 2019. Major contributors in terms of segments, net interest income has been growing at an average of about 7.5% over the past 4 years. And we can see there that accounts for about 70% of overall revenues at around $991 million. Other income has grown at a slower rate of just around 3.8% over the past several years, and is the other 30% of revenues at around $413.5 million. Now, in terms of profit before taxes, as mentioned, taxation expenses, or decline in taxation expenses, was really what improved profitability margins for Scotia in the most recently concluded period. And we can see that net income margins increased from around 34.9% to its current level of 37.3%. However, if we look at the red columns, profit before taxes in 2018 and 2019 was fairly stagnant at around $733 to $734 million, respectively. Now, one of the major developments, of course, is the agreement between Sagicor and Scotia for the sale of Scotia's insurance operations to Sagicor. That would have contributed to just around 14.3% of the profit before taxes of Scotia overall in 2018. So that development, which is expected to conclude sometime in 2020, barring any regulatory delays, should knock some portion of profit before taxes off for Scotia in the coming years. At the current price of $59.75, Scotiabank trades at a price-earnings multiple of just around 15.6 times, which is below the sector average of 16.5 times, and offers a quite healthy dividend yield of 5% compared to the sector average of 3.85%. So on the basis of fairly attractive valuations and dividend yields, but tempered by a fairly muted revenue growth, and that sale which should knock some of the profit before taxes off for Scotia, we maintain a neutral rating on SBTT. Turning quickly to Prestige Holdings, and for the 9-month period ended 2019, Prestige recorded an earnings per share figure of just around 43 cents per share, which was quite an impressive increase of 26.3% from the 34 cents per share recorded in the prior comparable period. Driving this performance was a mixture of revenue growth as well as cost containment. Revenues grew by around 5.2% from $790 million to $830 million, with a less than proportionate increase in cost of sales from $522 to $550 million. Overall profit before taxes increased just around 30% from profit before taxes, yes, by 30% from $30.8 million to just around $40.1 million. And overall net profits did increase just around that 26.1%. Now, as we take a look at the revenues and profit before tax margin for Prestige, we can see revenues have been consistently growing from just around $736 million in the 9-month period of 2016 to its current level of $830.5 in the 9-month period of 2019. However, the profit before taxes, net profit margins actually have been falling from around 6.9% in the 2016 period to 3.9%, and that has recently recovered in the most recently concluded period to just around 4.8% overall. So we can see that their strategies, and who doesn't want to indulge every so often in a terrific Tuesday or wacky Wednesday deal from KFC and Pizza Hut. I know I do. So At a price of just around $8.10, Prestige is trading at a price earnings multiple of around 15.8 times, which is above the sector average of around 13.6 times, but offers a fairly attractive dividend yield of 4%. So on the basis of improving performance, but constrained by a still weak operating environment, Bourse maintains a neutral rating on Prestige Holdings. That's it for this week's edition. For more information, you can give us a call at 226-8773 or 2Bourse. Email us at invest@boursefinancial.com or check out our website at bourseinvestment.com. Have yourselves a great investing week. This has been the Bourse Report.